crypto is just incredibly early. I think from our standpoint, the real competition is against the legacy financial system.
That is Aklil Ibssa, head of corporate development at Coinbase. He believes that the biggest mistake in crypto is fighting for short-term dominance instead of building durable systems that can actually compete with traditional finance.
Each of these acquisitions is a hallmark for how do we pull forward the product acceleration, or how do we seed new businesses in categories that we otherwise would have been maybe less excited about pursuing.
He explains how strategic acquisitions can accelerate innovation, open entirely new categories, and shift the competitive landscape when done with clarity and intent.
Integration is very hard. The conventional wisdom is that most, if not all, M&A fails, largely due to
Today, he explains why integration determines whether value compounds or collapses, and how to think clearly in an industry that moves at extreme speed. By the end of this conversation, you will learn how disciplined operators evaluate risk, think long-term, and build through volatility. I'm Alex Nwaka, and this is High Stakes. So, Aklil, maybe just walk folks through your background and give just sort of a quick intro on sort of your professional background and how you came to Coinbase.
Yeah, sure. So I'm Aklil. I lead the corp dev team at Coinbase. I started my career in investment banking. So I was at Deutsche Bank for 2 years covering TMT, did a bunch of stuff across sell side, buy side M&A, capital markets stuff. And I think like a lot of people decided I didn't want to be an investment banker for the rest of my life. And I was always sort of drawn to technology and technology shifts. I grew up playing a lot of video games and, was always just enamored with consumer products in the technology sector. And so decided that I would try my hand at that and joined LinkedIn. I was there for about 5 years, first in corp dev, later in product, which is maybe a story for another day. And learned a ton about, what deal making looks like in Silicon Valley, how to do tech M&A, got to lead a bunch of acquisitions and investments, later built some product. And then I think like a lot of people in 2017 was really drawn to what was happening in crypto, mostly as a passive observer, but later on, obviously joining the industry full time. And for me, I think what really drew me to crypto was this notion that there's this underlying technology that kind of makes it cheaper, faster, more efficient to do a certain thing. And that thing, obviously, in the case of crypto, is money, could be gaming, could be social, could be messaging, could be all these different things. And if you look at the history of what has happened when enabling technologies make it cheaper, faster, more efficient, you end up with this thing called platform shifts. That new technology, people start to build on top of it. It initially looks like a toy, then it becomes a product, that those products become companies, and then those companies become markets. And then massive, massive shifts of value happen. And so suffice to say, I was pretty red-pilled on crypto. And through a set of, I guess, fortuitous events, a former boss of mine was leaving LinkedIn to join Coinbase, and I thought this was an amazing opportunity. And so that's sort of the story. I joined Coinbase in about 2019. It's been kind of a crazy ride. We went from 600 employees to now close to 5,000. We've acquired north of 45 companies. We started a venture fund, and I've done more than 500 investments. Company went public. We've survived multiple cycles, and that's kind of what brings me to current state.
No, really awesome. And, talk about a horizon to, have been at such a company. And maybe before we go into some of the strategy related things that you spend a lot of time thinking about, maybe just contextualize for folks like where your role sits, really at the intersection of a variety of different things. There's M&A, there's platform strategy, there's also sort of long-term company direction that has to be taken into consideration with what you do. So maybe just describe like where your role sits in all of that, and we'll talk about it later in terms of the different tools in the toolkit, so to speak. But really want to give you a chance to sort of contextualize, hey, where does this role sit in the overall organization? Because it's really a critical one.
So it's funny, people ask me, well, what is corporate development? And so it is worth taking a beat on. So my role encompasses, I would say, 3 primary areas. One is on corporate strategy, which is kind of a buzzword, but what it means in practice is, how do we enhance the competitive positioning of Coinbase through a variety of different efforts, in most cases, investments as well as M&A, but also through product strategy. And so what this means is, asking and answering the canonical question of, does it make sense for us to buy, build, or partner for this capability? And so that means, hey, we think NFTs are big. How should we think about it? DeFi or certain categories within DeFi seem to be popping off. How should we think about it? Really trying to answer some of those questions. And then The second piece of the job is, if the answer to the first question is, well, we think M&A or a large alliance or strategic investment makes sense for us to do as a way to get exposure into a category or enter as a business, then my team and I look to evaluate, source, execute diligence, negotiate term sheets on acquisition opportunities, all the way through to integration. So that's what I think I would say the second piece is what we're more known for is kind of what, sort of makes the headlines. And then the last piece of it, I would say is, lower in terms of activity that we do, but something that's, I think, in some respects unique to Coinbase, which is, oftentimes it makes sense for us to invest for a capability to get exposure to a category. And so what that means is if there's a geography that we really like that we may not look to build into initially, or there's a capability that's just too difficult for us to build, or one that we want to monitor, oftentimes we'll take a large minority investment into a company. We may potentially take a board observer seat and look to monitor that, look to work with the company, develop a closer relationship. And then, sometimes it graduates into something much more strategic over time. And sometimes it just makes sense for us to hold that minority position. And so that's the role in a nutshell. It's a bit of strategy, a bit of M&A, a bit of investing. And, I have the great pleasure and benefit of working with the exec team on all those fronts.
No, excellent. And, from my, previous corp dev experience, I was at a bunch of different companies that, I wouldn't describe as like necessarily like leading the industry necessarily in terms of just how early we are in some ways in sort of the crypto space. And I think it's interesting to call out that, Coinbase is really, I think, one of the most, if not the most influential company in the crypto space, right? And when you think about the backdrop of that and maybe what responsibilities Coinbase has to help shape the industry, shape regulation around the industry, from your vantage point, like what are those responsibilities? How do those bleed into your job when you think about just sort of the weight that Coinbase carries in the industry and sort of overall as it relates to how the industry represents more globally?
Yeah, it's a great question. It is a tremendous responsibility. I think I share the perspective that, within crypto, Coinbase has a very strong voice. And I also share the perspective that crypto is just incredibly early. I think from our standpoint, the real competition is kind of against the legacy financial system, not within the, crypto. I like to say this analogy, which is it's sort of like microbreweries fighting over each other versus fighting over Anheuser-Busch, like kind of losing sight of the bigger picture. And so I think from our perspective, the role that we play in the ecosystem is one where we are long-term oriented and ecosystem first. And I think emphasis on the long-term orientation. I think, over a long enough period of time, we believe in the true, potential of this technology. And, we view our role as kind of pushing that forward to the extent possible. And that, a rising tide sort of lifts all boats. And, we have the benefit of being in the ecosystem for a very long time. As you noted, we're obviously quite influential in the industry. And so, I think our POV is that, we want to push this industry forward. We try to be long-term oriented and not worry about the short term.
One of the reasons I was so excited to have you on, Aklil, is the fact that over the last year, you've led what is like one of the most aggressive and consequential M&A pushes in crypto history. 10 deals last year. And maybe just to give like my POV on this, when I was in corporate development, the idea of doing 5 to 6 deals a year was like really breakneck pace. And I just remember thinking there's no way we could do more than that, at least at the companies that I was at. Maybe can you contextualize for the audience what it takes to achieve that kind of velocity? I mean, that's a lot of deals. And that's just what makes it into the fabric of done deals, right? That's not even talking about the deals that don't get done, right? So maybe contextualize that for the audience a bit in terms of that push, what it takes to hit that type of velocity.
So I think it's worth taking a beat on, sort of what is the broader context for why we pursued and had such a strong year in 2025. And I think the two driving factors were beneficial market conditions. Obviously, through 2025, the broader macro sentiment was positive for crypto. And then I think the second driver was, really this push around regulatory clarity. I think with those two things as the backdrop, it sort of emboldened us to be, pretty aggressive, but selective in our aggression. A big roadmap, I would say, from an M&A perspective, comes from having a really clear strategy and having a very ambitious strategy. And so each of these acquisitions is sort of a hallmark for how do we pull forward the product acceleration, or how do we seed new businesses and add categories that, we otherwise would have been maybe less excited about pursuing had there not been more regulatory clarity. The last piece that I'll offer up, I think, on this point is that, look, we've been doing M&A for almost a decade. We are sort of, in some respects, the original crypto acquirers. And just in my tenure over the last 7 years, we've done deals as small as one person to 150 people, from a few $1 million to multiple $1 billion. And, with that comes, building out I like to call it like muscular awareness or kinesthetic awareness on M&A, and how to do these deals and how to integrate them to make sure that you get the value that you think you're going to get out of them. And so I think, we're probably in some respects the most, I would say, skilled acquirer in terms of just having reps and time under the belt. And, when market conditions are strong and when there's regulatory clarity, I think that muscle allows us to get aggressive, but be selective in that, and try to push forward the roadmap where we can and see new businesses when the opportunities present themselves.
And you spoke earlier about what I would describe as the tools in the toolkit, right, for your role and frankly Coinbase, writ large as it relates to that. Really put it in the framework of, you can build, you can go buy, you can partner, or you can invest. And when I say invest, sort of minority investment, venture investing, so to speak. When you think about each one of those tools in the toolkit, maybe let's describe like what fits each tool for you and where the sort of key decision points are. And I assume that in some instances it starts as one and could shift to another based on new information, based on how the relationship evolves. But how do you think about those tools in your toolkit and when it's most appropriate to use them and not?
Yeah, it's a great question. So I think the first order question we try to answer is this a capability or a category that we need to own? Do we think that the answer to that question is yes or no? And if the answer is yes, that's often we want to buy or we want to build. And if it's something that we don't think is, near term immediate for us to own it, then maybe we look to partner and or invest. So that's, I think, the first order question. And then I think within that, we sort of look at certain characteristics about opportunities to determine whether it does make sense to own it, or whether it doesn't make sense to own it. As one example, for owning it, if it's something related to our core business, trading, payments, these sorts of categories, then often the answer is yes, it does make sense for us to own it. And, it doesn't always make sense to buy it within that. If it's something that's core to our infrastructure and, incredibly difficult for us to integrate, maybe we just want to build the capability. By comparison, if it's something that, is extremely hard to build and it's within our core and we think there's something really unique about it, and we think that a potential target possesses that capability, and then we would look to buy. And then I'd say on the other side of the fence, there's investor partner. And often it's the case that there's a capability that, we think, oh gosh, it's really, really strategic for us, but maybe it's not deeply in our core and it doesn't really make sense for us to own it today. Maybe we'll look to do a partnership. And in some cases, it makes sense to do an investment alongside that. I'd say that's sort of like the set of characteristics that we sort of tend to look at across the toolkit. Does it make sense for us to own it? Yes or no? How strategic is it? How urgent is it? Do we actually need to own it versus can we get away with just partnering? And I would say between those sets of kind of conditions, we try to make a determination on whether we look to buy, build, partner, or invest, and try to execute quickly when we figure that out.
And are there any factors that make that more or less complicated to make that decision based on, a couple examples that would come to mind? You're a publicly traded company. So being a publicly traded company, you have additional responsibilities, whether that's reporting or other ways that you might think about it in terms of your size. There also is like sort of the regulatory environment to contend with. And so are there different facets at more of a macro level that are maybe outside of your direct control that influence the way in which you make that sort of determination on the toolkit?
Yeah, 100% yes. I'd say there's probably a couple of factors, both exogenous as well as in our control, that can make this story a little bit more difficult. I think one, you kind of called it out, we are publicly traded. And as much as we don't maybe have an appreciation for this in terms of the impact, but the macroeconomic cycle has an impact on our ability to execute on transactions, full stop. And we are obviously long-term oriented, but timing does matter in some respects when you're evaluating opportunities. And so you may really want to own something, but you may not be in a position to do so because maybe you're in a very, very deep bear market, or maybe you want to preserve cash, or maybe there are other priorities to pursue at that time. And so I'd say macro is probably one piece of it. The second, you also called out regulatory considerations. Taking maybe a stroll down memory lane, there was a period of time where we were operating our core trading business, offering, different trading products to both simple retail, but as well as advanced traders. And this little company called FTX came onto the scene. And, they, in our estimation, were, of course, higher on the risk curve, but doing things from a regulatory standpoint that we would never have been comfortable with in that period of time. There's obviously the ESPN highlight reel of, situations where that decision has gone right. Obviously, FTX is no longer around anymore. And, there are situations that are less on the ESPN highlight reel where, it sort of forces us to contend with our own risk posture. And so I'd say we're in an environment now where the risk posture has shifted dramatically, and we're much more comfortable and emboldened to take bigger and bigger risks. But there are certainly examples of, in prior environments where, we were just not willing to adjust our risk posture to kind of meet the moment. And sometimes that's a good idea and sometimes that's a bad idea. But of course, it affects the impact to potentially buy, build, or partner. I'd say the third one is honestly asset availability. So there are often times where, you're like, gosh, there's this new innovation in crypto. There's like one company working on it. And we're like, gosh, this is one of the most exciting things we've seen in a really long time. Be it like a new upgrade to the Ethereum L1 or, at the time, way back when it was staking. We were really excited about staking. And, there was like a handful of maybe less than 5 companies that were even offering staking services. And, we fundamentally believed that, staking is going to be a large business opportunity, and that, every proof of stake protocol out there is going to offer staking rewards. And that's going to be a novel new way in which retail participants and institutional participants can get value on the tokens that they hold. And, there was like maybe less than 5 companies. And so there are a lot of factors. Those are 3, macro, regulatory, and asset availability. There's probably a list of a dozen more that, can affect and make the decision more difficult. And, part of the art behind it is, how do you sort of navigate the complexity to try to drive the decision for the company at the highest level.
And you hinted at this with, the hindsight's 2020, right? And so you can look back and say, great decision not to lean in on FTX. And, it also cuts the other way where you probably have seen opportunities that were really, you're on the fence bound and didn't do and became really exciting opportunities in hindsight. I always think about this the same way as when you complete, sort of transactions in an M&A, standpoint, because you spend so much time, you can't disclose when you're talking to a company. You go through a whole process where things are under wraps. And then eventually, after all like the deal work is done, there's an announcement that goes out publicly. And I always used to revel in the, what I call the public debate on how good or bad a deal sounds when it hits the public domain. I'm really curious about any deals or which deal in particular you felt there was like the biggest delta between what I would call the public discourse on the deal rationale and like what the internal like rationale was. Because I just find that always really fascinating, right? Because there's so much work that goes into why are we going to do this deal and why do we see it as potentially accretive? It gets announced and then the whole public has like the wisdom of the crowd without any of that information. So I'm just really curious where you've seen the biggest delta on a particular deal or maybe even a type or category that you guys have invested in or bought in.
Yeah, great question. I'd say that I am in some ways a bit biased for 2 reasons. One, I think the street doesn't understand Coinbase's stock. And then I think 2, personally, and maybe not a Coinbase view, but I have a general skepticism around mainstream media and public narratives and positioning. But with all that said, I'd say, in general, not to pick on any particular deal, there is a focus on headlines around, is this accretive or how much did they pay or, who's making money and, did the investors get a return or these sorts of things. And, from our POV, what we try to focus on is how durable is this acquisition and, what does the long-term value story look like for us? Less about what did we pay in the near term. Somebody told me once that all good and bad things in life come from compound interest. And I think that's a really good way to frame, I think, how we think about acquisitions. And, maybe just to pick on one in particular, we bought this business back in 2020 called Tagomi, which at the time was an early institutionally focused prime brokerage platform, which, to be honest, was a pretty novel concept. Back in the day, you had BitMEX for your perps, you had Coinbase for your custody, you had, multiple different spot exchanges in different jurisdictions, and the entire category was really fragmented. And if you compare that to what is happening in TradFi, you have institutional investors, you have prime brokers, you have integrated custody, you have access to markets, and you have a variety of different products under one house. And, we bought the business and, initially the integration was a little bit challenging. It was one of our first acquisitions that was just not, a team. We had bought a team, a technology, the early inklings of a business. And, while it was near term, I would say painful, that acquisition has compounded for us, like I would say probably in our top 5 best deals of all time, because Tagomi forms the basis for what is today Coinbase Prime. It's nearly 20% of Coinbase's overall revenue from the early Tagomi acquisition. And the individual who leads that business today was actually the former CEO and co-founder of Tagomi, Parag Tussar. And, when I take a step back on like, what are the acquisitions that, the headlines get it wrong? I think from our POV, there's a near-term focus on, what did somebody pay, or what is the, are the investors getting paid back? We tend to focus on, well, is this going to compound for years to come? And, it could be the case that an acquisition that seems like small in the headlines, or maybe not that big of a deal in the headlines, could actually be, quite transformative for Coinbase as a business. And those are the types of deals that we try to look for.
Yeah, and I also think from my previous corp dev experience, the thing that folks really underestimate is the human element of acquisitions. I think that it's very, very difficult when you're not close to the individuals who are part of the entity and team that you're acquiring, to just understand whether they have vision, whether that's like really killer execution, or frankly just really great domain expertise, and how that, to your point, can compound in a way that a lot of the market is not really set up to price well, in my opinion. And so that's a really great example. People don't talk about integration, but in some ways it's like after the deal's announced is like when like the real work starts. There's a ton of work going into structuring and figuring out what it is that you want to go acquire. But to your point, the real value is sort of baked over time, which really takes into account the ability and the prowess around integration. So I would love to get your sense of how Coinbase integrates its acquisitions. I think this is a combination of process, who's involved, how do you measure success? So really curious how you would describe that process and how integral you think it is relative to the overall success of an acquisition.
Integration is very hard. And I know that sounds slightly reductive and maybe minimizing, but truly I would say, the conventional wisdom is that most, if not all, M&A fails largely due to integration. And I could not agree with that sentiment more. There are just so many things that you have to get right. And if you go down the list, it's just, you just kind of maybe to think for a moment, like, okay, you're acquiring a business. What are the different disparate components of said business? There's the people, there's the product, there's the technology, there's the customers, there's regulatory, there's compliance, there is like security, there's workplace, there's tax, there's vendors. Like there's a list of 20 to 30 disparate components of what make up a business. And to take that and inject it into your own business, where there's potentially different operating norms, different systems, different product, different culture, different everything. Navigating that is exceptionally difficult. So I think that's worth saying, I think just out loud. I'd say double clicking within that, I think we've gotten pretty good over the years on how we approach integration. Maybe I'll offer up, there are a couple of characteristics that I've seen in terms of what has been consistent on when we've seen very successful integrations. One of which I would say is an executive sponsor and an executive team that fully supports and is pounding the table for the acquisition and practically ripping it out of your hands. Anytime you have an acquisition where the acquiring business is extremely excited and they can't stop texting each other, they can't stop grabbing dinner, and they're road mapping, and you find out, the next day, you're like, oh gosh, that is a really, really good sign, because that shows an overwhelming commitment to run through and walk through the mud that I just described on the complexity related to integration. So that's one. I think the second piece is a really, really tight strategic rationale for why you're acquiring this thing in the first place. You'd be surprised that, a lot of people like to throw around, hey, this company should buy that company. And, it's fun to pontificate and talk about, what company should buy what company. But you'd be surprised when you get underneath the hood, if you just ask the simple question at times to individuals who engage in that, why are we buying this thing? Like truly, explain it to me. The three reasons why we are acquiring this. And often most cases of whether we should acquire something or not kind of fall apart at that stage. And so when there's a very, very tight strategic rationale, it tends to lead to higher quality integration outcomes because everybody rallies around those three reasons why we're doing it. And then, again, it makes the mud a little bit easier to walk through. I'd say the third characteristic I've personally seen that leads to strong integration outcomes is consistency and sticking to the product roadmap. When you're acquiring a company, you are fundamentally paying a dollar amount on the basis of what happens in the future. At its most atomic unit, that is what you're doing. And if there is a deviation from said future roadmap and we say, hey, we actually want to chase this other thing here, maybe it's a bigger opportunity, but it's a different risk profile. And often it's the case that, if you're deviating from what we kind of said we were going to do, that can lead to, I think, really subverse outcomes that I think no one really wants to kind of what folks kind of want to avoid that. And sometimes there are situations where it calls for it, where market conditions change dramatically, priority shifts, kind of change dramatically, and sometimes those decisions are justified, but often it's the case that the unintended consequences that the integration can kind of go a little bit awry. But I think the opposite of like sticking to it can lead to really, really high quality outcomes. I don't know if that answers your question, but hopefully a little bit of
It
helpful
does.
detail
I mean,
behind the curtain.
I'm also, would almost press you on from your perspective. Have there been any of the acquisitions maybe in the last year where you would say there was a lot of unexpected value that we found as we went through the integration process? Did anything come to mind there?
Oh my gosh, yes. So, a deal process, just to kind of tee this up, deal process is, maybe you get a couple of weeks before you sign a term sheet. You get maybe a couple of weeks after you sign the term sheet. Then you signed and you're getting married. With that sort of as the context, there have been unexpected value that have come from acquisitions. So when we bought Deribit, it was very clear that the leadership team was exceptionally strong, that they were the market leader in options, that they had built an exceptional trading system, and that their customers loved them. I think the things that we didn't expect was 2-3 layers down, the two people on this team were absolutely world-class. And, I'm still hearing from, some of the folks on the working team that are working on the integration, my gosh, these guys really know what they're doing. They really know what they're doing. And, it brings the head of corp dev a lot of joy to hear those things, because there are unexpected, pockets of value that you really didn't anticipate that were obviously aligned with a theme that you sort of identified as part of the deal process. But, it's amazing to see it permeate through an entire organization. I'd say other pieces where, we've acquired a license where we said, hey, we're going to unlock this new capability or this new geography. And we actually find out that, this license can actually enable us to access this new product that we weren't thinking about when we bought the company, but became a priority 2 years later. We already have a license for it. It's amazing. We were able to offer this product yesterday. And so there are certain situations where that happens. It's oftentimes driven by, obviously truncated deal processes where you just can't possibly cover everything. And sometimes that leads to, unexpected pockets of value. And also when priorities or the market shifts, you look back at the things that you bought and you say, gosh, there's this unexpected use for it. And, that can be obviously quite positive.
And I know you mentioned that, there's a wide berth of, size of deal and size of company that you have acquired over your time at Coinbase. I did want to zoom in on Deribit because, again, it's the largest acquisition that you all have done, and really, I think one of the largest acquisitions done in crypto history. I'd love to just double click on how did that deal come to be? And, I think there's always really potentially very interesting stories of how did we identify the target? Was it a competitive process? Is there something that Coinbase saw that others didn't see? So I'm just really curious how you would articulate sort of that particular deal, how it came together and how the process played out.
So I'd say, we are a strategy first kind of M&A function where the strategy is the first thing you ask. And, when I teed up, what does my role do? That's the first thing I started with. And it's important to say that out loud. And so in the context of that, derivatives was and continues to be one of the top 5 company-wide priorities. And, we want to continue to push in the fold here. And I think within derivatives, Deribit has been kind of a long known name within the industry. And as we were thinking about, okay, well, how do we push derivatives forward? We saw Deribit as like an extremely complementary piece of the puzzle to complete the vision of offering spot, futures, perps, and now options all underneath a single trusted platform. And from our perspective, the last of the remaining pieces of the puzzle to assemble kind of the Avengers of the most trusted derivatives platform on the planet. And I think in terms of where it started and kind of how it came to be, we kind of had this piece of the strategy in mind. And Deribit's a kind of a long known company in the space. We continued to be impressed by just the durability of that business. And they've been the market leader for options for over 3 years. You don't see that kind of durability in crypto. Things often are quite fleeting. And so we were really impressed with that. We were really impressed with the team. Every individual we met amongst the leadership team blew us away. And, the more and more we pulled, the more and more we liked. And, eventually it kind of consummated in obviously some diligence and then into a term sheet. And, I would say post close, I've been really, really impressed with the performance of the Deribit business. We're already seeing record volumes and revenue since we closed the deal. It's not just, I would say, the largest deal in history. It's probably the best performing deal we've done to date. And I couldn't be more excited about that.
Maybe to highlight one other deal that to me stands out in the last 12 months or in 2025. Echo is often described, I think, by many folks as completing Coinbase's sort of full stack solution for crypto projects and investors. Can you talk a little bit about that acquisition in particular and what particular void it filled for Coinbase and how you all thought about that from a strategy perspective?
So this kind of on-chain capital formation, vision is actually quite simple. We want to be an end-to-end platform for any founder to start and scale their business on-chain. And what that means in crypto is you want to form an LLC, you want to get your Cayman BVI entity set up, you want to launch a token, you obviously the token, you have investors that you need to deal with, you have a cap table, you have employees that you're paying those tokens out to, you eventually want to raise primary capital, you eventually want to go TGE, get listed, and then you eventually want to drive utility and acquire distribution for your token. And it just so happens that we have a lot of those pieces today. And, we acquired for, I would say, two of the, couple of pieces that remained that we didn't have until 2025. And so one of those is Liquify. Liquify is a token cap table management platform. It enables startups that are looking to offer a token as part of their product, the ability to manage their cap tables, kind of like a Carta for crypto. And they handle things like automated vesting, compliance, formation, all the kind of nasty stuff that, folks would previously do in spreadsheets or work with lawyers on, fully automated within software. And the second piece was obviously Echoes. And then investors are locked out of or have difficulty finding novel new instruments that they want to be a part of. And Echo helps bridge that gap. And if you think about what Coinbase brings to the table, we obviously have significant retail distribution on one hand. And then we have a massive secondary market trading exchange on the other hand. And so Echo sort of solves this pain point and then kind of is the last kind of remaining piece of this capital formation stack where now you can come to Coinbase, you can onboard with Liquify, which we've now rebranded to Token Manager, and then eventually be able to list your token on the Coinbase exchange, and then we can help drive distribution and trading for your token. It's a really interesting kind of piece of the puzzle where we're both solving a core problem for a lot of the constituents and users on our platform across founders as well as investors or market participants. But it's also very strategically advantageous for Coinbase to offer novel new instruments much earlier than the competitive landscape. And it enables us to, I'd say, go much earlier, serve these customers with better, stronger value propositions, but also own the downstream liquidity and custody and monetization engine associated with these new novel projects. And that whole kind of life cycle of token cap table management is kind of the piece we're trying to put together.
It's a really great segue into maybe zooming out a bit because so much of what I've seen publicly from Coinbase is really the articulation of a strategy that brands it and I think puts it forward as the everything exchange. And so one, I'd love to ask you as somebody who's, part of the senior leadership at Coinbase, what does the everything exchange mean in practice? Like, what does that vision represent? And then as a secondary component, because we just spent a bunch of time talking about how, the M&A strategy has really been put in place to try to bridge gaps or identify sort of areas where you can bring those capabilities into the everything exchange strategy. How you see the acquisitions that have been done in 2025 and as you think about 2026, how that mosaic fits all together. So I know it's a really loaded question, but maybe starting with like everything exchange, like what is it? What does the vision, what does it mean practically?
The belief behind the everything exchange is that we basically think that everything is coming on chain, and we think that crypto rails offer a faster, cheaper, more accessible rail for a lot of things in the world. And trading is one of those things. And so this push around the everything exchange is an acknowledgement that, we want to offer more products, we want to offer more asset classes, and we want to do it in more geographies. And, the goal is to be this one-stop shop to trade every asset class and do so in a way that meets our customers where they are. Back to the theme of being a strategy-led deal team where, we've sort of put down the gauntlet and said, hey, we want to shift and transition as a business from being a single asset class brokerage to being a multi-asset class brokerage. Deribit helped us get more products through options, and then Vector helped us expand more assets through the Solana ecosystem as well.
And I didn't have this, I didn't think about this before, but is there an organization or like a firm that you all look at and you say, when we grow up, or like when we hit like insane scale, we want to look like this? Is there an organization or a firm that you all look at and say, this is the destination, or this is what like we want to look like in 5 to 10 years?
I'd say now, we probably look at ourselves as we want to be the number one global financial platform. And we think that crypto is the underlying technology that's going to enable that. And so, from that lens, that's offering trading, that's offering payments, that's offering custody, it's offering staking, it's offering every primitive that you could imagine: borrowing, lending, spending, like essentially every, primitive that you could think of within financial services, and doing so not just in the US, but globally. So that's sort of the ambition. Now, is there a number one financial platform globally? Not really. You can maybe put JPM in there, maybe some of the larger banks, but I think the true north is the number one financial platform globally, and in service of this mission of obviously creating an open financial system for the world.
So when we think about and look ahead to 2026, you just came off a banner year in terms of M&A activity. What do you foresee in 2026, and maybe specifically both in terms of activity that you expect from M&A, and then what categories you think are most exciting for you and or for the broader crypto industry to watch?
So it's very timely. We spent some time on this with our leadership team just a few weeks ago. I'd say the three themes that we're most excited about, one we've already sort of talked about, which is how do we advance the everything exchange? And in my mind, it's, again, more asset classes, more products, more geographies. And so are there more asset classes that we think make sense for us to potentially acquire to bundle into the everything exchange? Are there more products, obviously Deribit options, but are there more products that our customers are asking for that make sense for us to acquire to, again, bundle into the exchange? And then geographies. Are there geographies that we're, not currently in, or smaller relative to, what the potential opportunity is in that geography? And does it make sense for us to acquire to expand more geographies for the everything exchange? And so I think there's a lot of subcategories that are within that. But I would say in general, that's the theme that, we're spending most of our time on. The second I would say is stablecoin payments infrastructure. We obviously are direct, or I guess I should say indirect beneficiaries of our relationship, a direct relationship with Circle and USDC. And, we are obviously a multi-stablecoin platform, but we have a lot of capabilities that can make us, a pretty interesting set of products for businesses or developers that want to send and receive payments. And, obviously being USDC and having A lot of different fiat on and off ramps across the globe. We have one of, if not the most trusted custodian under the sun. And when you put all these pieces together, it makes for a pretty compelling Coinbase payments or Coinbase for business type product. And those businesses are, in many respects in their early days at Coinbase. And so we're kind of on the lookout for, are there adjacencies or core capabilities that can help accelerate that and augment that platform and help us differentiate against the landscape? The third, I would say, is owning more of the on-chain infrastructure that exists within crypto. We obviously, kind of all know the layers of the stack when it comes to the on-chain economy. You have the protocols at the L1 layer, you have the L2s that sit on top, you have, infrastructure that sort of sits between that, and then you have the application layer and ultimately the end users. And within that, we obviously own the retail distribution, so the user base. We also own a variety of different applications, and we own some infrastructure as well as at the L2 layer and through Base. And so we're kind of on the lookout for, are there infrastructural components that exist that are critically important in the crypto economy for us to own versus just sit on top of and leverage. And so, one, I would say, instantiation of this was us putting down the gauntlet and saying, we're going to build an L2. That was, I think, pretty controversial at the time. And now, obviously, Base is one of the most successful L2s out there. And, we're looking to replicate upon that success. Does it make sense for us to acquire more at the kind of protocol infrastructure layer to help, kind of benefit our end customers and push forward our vision of the on-chain economy? And so I'd say those are kind of the three themes: everything exchange, stablecoins and payments, and then the on-chain infrastructure are probably the three.
So my last two questions here. So one, what's been the most valuable experience or lesson that you've learned while you've been at Coinbase?
I would say the importance of patience and long-term orientation. When we began the interview, I told you about what got me so excited about crypto in the first place. And in many respects, it's just this idea that this underlying technology that's cheaper, faster, more efficient has created, entrepreneurs building on top of it, which build products, which then become companies, which then become markets, and then fucking trillions of dollars of value transfer happens. I mean, that is freaking exciting. But when you look at the day-to-day of crypto, oftentimes you get pretty discouraged at what happens in kind of the short term. And, that could be near-term market volatility. Oh no, Bitcoin crashed another 40%. Oh no, this thing has happened, or that company blew up. And there's a lot of things that are the near term, in some respects, shake the religion. And I'd say overwhelmingly, Coinbase has taught me to be patient and have long-term orientation because the near term can be so freaking challenging to deal with on a day-to-day basis. And I'd say, to maybe push that lesson even further, I would say Coinbase, again, it comes down to compounding. I mean, a lot of the things that we did back in 2019, 2020, I mean, we kind of joke, USDC was kind of maybe sort of built in like a weekend. And, there was a small ragtag team, and candidly, there wasn't unilateral alignment to do USDC across the executive team. And, it's just this idea that, the space is so early, and you make these bets, and sometimes they freaking compound and can change the trajectory of the business. And but the day to day can be pretty hard. So I'd say that's probably the biggest lesson.
So Aklil, we ask all of our guests for their high stakes hot take, which is their boldest prediction for the crypto market in 2026. So do you have a hot take, whether popular or contrarian, your pick?
I'm not so sure this is particularly contrarian at this point, but I do think that prediction markets will continue to go vertical. I think we're living in a world where everything is financialized, and that's increasingly making its way into the fabric of society. And, I look at some of my cousins who are, Gen Zs or even earlier than Gen Zs, and they're on Kalshi or Polymarket, and they've got a totally different language they're speaking. And, I myself, I'm not that old, but I open Instagram and try to post something nowadays. I'm like, oh my God, this is not built for me. And so I think there's a generational or demographic shift happening where there's people who are younger that are coming online, and, it's increasingly more financialized. And I also think that, it does serve this really useful function in society where, obviously there's a commercial angle to it where you can hedge out risk if, you want to go long Microsoft but short Xboxes, you can do that. And so I think it's an important feature for the kind of broader financial markets. It's also entertainment. People use it as information. If you're looking at the Golden Globes, you're like, oh man, I wonder who's going to win. You can look at that as an alternative source of information. And I told you how I felt already about mainstream media and public narratives. I think I sign up, I would say, wholeheartedly to there being alternative places to get your news and information. And I don't know. I just think that, it's a really beautiful thing that's happening with prediction markets, in my opinion, right now. And I do think they will continue to go vertical. I think it's driven by, obviously, regulatory clarity, a demographic shift, and this idea that everything's becoming financialized.
I think it's also going to have utility and use cases that we don't even quite realize yet. And, whether that's pricing of insurance policies or other things that we don't really think of like immediately when we think about engaging with prediction markets. And so totally agree with you that it's made its way into the social fabric in a way that I didn't think was something that I would have predicted, pun intended. But with that, Aklil, we'll park it there. Aklil Ibssa, Head of Corporate Development at Coinbase. Thank you for joining High Stakes. We look forward to having you on again, and thanks for coming on for this one.
Thanks, Alex. Appreciate it. It was fun.
Absolutely. That's a wrap on High Stakes, the podcast where Web3 meets the real world. For more insight into how blockchain and AI are reshaping institutions, head to validationcloud.io and follow @validationcloud across all socials. Stay tuned for more conversations from the front lines of innovation. I'm Alex Nwaka. See you next time.